Group structures, what are they? Can they benefit you? And who are they for? In this video, I'm going to break down exactly what a group structure is, how it can benefit you, and how you can use it as a way to pay as little tax as possible whilst growing your business. Firstly, what is a group structure? Very simply put, it's you setting up another business that you own, another limited company just like yours, but this limited company now owns your current limited company. And as you can see from this beautiful diagram, this is you would own 100% of a holding company, which is what the group structure entails of. You own 100% of the holding company, and the holding company owns 100% of your current trading company. The majority of people I see that show some interest in group structures are because they either want to invest their profits into property or they want to start or buy new businesses. Under those circumstances, a group structure can be an absolutely amazing tool to build wealth quicker, to pay less tax, and provide enormous protection for your money and assets if anything bad happens. And I'm going to get into each one of those, break it down, help you understand a little bit more about why a group structure is a good tool to do this. Number one, obviously the main thing you're here for, tax. There are two main ways where a group structure provides enormous tax planning opportunities. And one, I'm going to go back to my diagram now. Your current trading company is making money, it's got profits in, and you don't want to deploy it into reinvesting more into that business, or you're already doing that and now you still want to invest into new companies. I'm going to use an example of a roofing firm that we've helped. These have excess profits in the company that they want to now build new businesses that bolt onto their current business. For example, they're building now a secondary scaffolding company. So all of the money in this company will be funneled into the holding company. The holding company will create a scaffolding company. Usually, the money from the trading company would have to be taken out to you, which creates a personal taxation point. It usually gets taken out as dividends, or you loan it to a new company. But the majority of people just take it out as a dividend, which makes you lose between 30 and 40% of whatever you take out that goes straight to HMRC instead of going into that investment. So if you take out £100,000, and you don't need it to be on this large of a scale, but if you take out £100,000, you're going to lose between around 35k in just dividend tax. Instead, that 35k is a deposit for a buy-to-let property. So you're using the tax money for the investments instead of it going to HMRC. So what the roofing company did, like I said, instead of the money going to him, the director, it's going to his holding company, and the holding company has created another company underneath that, scaffolding company, and the money gets funneled from the holding company into this new venture, the scaffolding company. Doesn't create any tax. The money just flows around the group because it hasn't come out of the group. It's essentially one big limited company, although it's not in actual terms, but the money doesn't go outside of it to any individuals and gets taxed personally. So that's the tax strategy number one. Now, the second one, let's say for example, this guy, his scaffolding company does really well and the roofing company is become his secondary business. Let's say he wants to sell the roofing company, Tradeco. He's not selling the company. The holding company is selling the company. So let's say this is completely wiped out now. He sells this for £1 million, for example. You'd normally have to pay capital gains tax. In a group structure, you don't. You claim what's called substantial shareholding exemption. So let's say it's £1 million. £1 million goes into holding company's bank account for him to deploy into a property company, a new trading company, his scaffolding company. And again, it doesn't create any tax. So between personal tax, capital gains tax, if this is your plan to build long-term generational wealth, a holding company is pretty much surely a good opportunity for you to do so. Now that's just a tax. Let's discuss the other benefits of a group structure. Protecting your assets is the second biggest reason to create a group structure. If all your money, all your eggs are in one basket, essentially, when you've got one trading company, all your eggs are in this trading company's basket. And what a group structure does is one, allows you to funnel the funds, so your eggs start moving into new baskets, into property or new ventures, but also your assets, all of the vans, all of the equipment, all of the machinery, whatever business type you've got, any of the assets in a business. If trading company has a problem and has to go into administration, which is obviously very, very common in construction, a group structure allows you to move those assets out so those aren't at risk. If when you're going to your company has to liquidate. Nobody thinks their company is going to fail, but in construction, companies fail every single day, or they delay failure. Now, it's best to get this type of structure involved as soon as possible because one, you can build that long-term wealth gaining strategy, but two, you can just protect yourself. I've seen so many people come to me and have said, I had a business for 7, 10, 20 years even. They've built up all this money, all of these assets, all these customers, all these systems, and now they've gone into liquidation and they have to start at ground zero. The group structure would have avoided this. So let's say a trading company does fail. It goes into liquidation. Fail is the wrong word. Let's say it goes into liquidation. Gone. Now, you've already got your funds in property. You've already got your assets in a holding company, or if it's a lot of vehicles, you've got a van leasing company that leases the assets to trading company. So if anything happens, all you lose is your softwares, your bank accounts, your systems in trading company, but you don't have to start at ground zero. You still have all of your assets. You still have all the money that was built up in a business and used for investments, scaffolding, property companies. So you don't start at ground zero. And another benefit is when you sell the company. Obviously, I've already mentioned the tax side of things, how it can be an amazing tool to sell the company. But another thing is that it's clean. If you want to sell part of your business, you don't want to sell all the assets, but you just want to sell the business, you want to sell the customer base, etc., all the systems, the staff, the profit margin, you're selling that to a buyer. It's completely clean. You just sell that part of the group. And again, obviously you get the tax benefits, but it's just much, much cleaner when it comes to a sale. We currently have quite a few group structures in our portfolio of clients, and it's all set up for very similar reasons. So we've just recently set this up for a fit out company. Now they're going to be building a property portfolio. In construction, a property is obviously the next step for a lot of people, especially for this client or a fit out company. They've got an extensive network of subcontractors in all different trades because they use it in their current business. So they can squeeze out better margins than usual property developers or property investors because they already have good rates. They already have, an extensive network of subcontractors to go in, do conversions, do renovations, and again, just squeeze out as much margin out of that property as possible. A group structure is going to allow them to build that property portfolio much faster than without. So it's a very powerful tool to use if used correctly and set up properly from the start. Now, you don't need to be a multi-millionaire or turning over multi-millions to do this and set this up. Like I said, build the foundations right from the get-go or early as possible and build on those solid foundations. If you need help with setting up a group structure or you just want to know roughly how much it is, book a call from the link in the description and the comments. Book a call with me. We'll discuss your current situation and I'll give you a ballpark figure on how much it would be to set up and manage your group of companies. I've also got a downloadable PDF in the, again, description and comments with more tax strategies for your limited company. Download it, instantly implement them into your business, start saving tax from today. It's something that most accountants, pretty much every accountant has missed a lot of them that I've seen on new clients. So download it, implement and start paying less tax from today. Hope you enjoyed the video. If you did, drop a like and subscribe for the channel. I've got many more of these type of videos coming out, so drop the subscribe to make sure that you don't miss one of these videos. Take care and goodbye.